When you watch trading videos online, it often looks like successful traders followed a straight path. They learned a strategy, they practiced a bit, and then they became profitable. But after starting this journey myself, at 57, I realized something very different. Most traders don't follow a straight line. Instead, they go through several phases, emotionally and mentally. And almost every trader I've talked to seems to recognize these same stages. So in this video, I want to share the 5 phases that many traders go through on the path to becoming profitable. And honestly, I'm still somewhere in the middle of them. Welcome back to my honest trading journey. If you are new here, I'm a 57-year-old from Germany who started learning day trading later in life. I'm not profitable yet, and I'm documenting the real process, including the losses, doubts and lessons. I'm not teaching trading, I'm simply sharing what this journey really looks like. But I still hope that you might learn something from it. So, today I want to talk about the 5 psychological phases that many traders experience. Maybe you'll recognize some of them yourself. The phase number 1 is the excitement phase. Almost every trader starts here. This is the phase where trading feels exciting, full of possibilities. You discover charts, you watch YouTube videos, you read books, you see traders making money, and you start thinking, maybe I can learn this too. Everything feels new and interesting. You start studying strategies, indicators, patterns. Sometimes you even have a few lucky trades at the beginning. And that can create the feeling that trading might be easier than it actually is. But this phase usually doesn't last very long. Phase number 2 is the overconfidence phase. After the initial excitement, many traders move into a phase of confidence. Sometimes too much confidence. I've been there. You've learned a few setups, you understand some chart patterns, you start believing that you figured the thing out. At this point, traders often begin increasing their position size or trading more frequently. And sometimes they even have short periods of success. But the market has a way of humbling people. Sooner or later, reality catches up. And then comes phase number 3, the frustration phase. For many traders, this is where things become difficult. Losses start appearing, strategies that seem to work suddenly stop working. You realize that trading is far more complex than you expected. This phase often includes self-doubt, confusion, strategy hopping, and emotional reactions to losses. You might start asking yourself, am I doing something wrong? Is this even possible to learn? Did I start too late? From what I've seen, many traders actually quit during this phase, because the gap between expectation and reality becomes very clear. And then you have phase number 4, the self-awareness phase. For the traders who continue, something interesting often happens. They begin to realize that the biggest problem is not the strategy, it's themselves. You notice pattern in their behavior, entering trades too early, breaking their own rules, moving stop losses, trading out of boredom or frustration. This is the phase where traders start focusing on discipline, risk management, emotional control, and consistency. It's less about finding the perfect strategy and more about becoming a more disciplined decision maker. Personally, I feel like I'm somewhere around this stage right now. Still learning, still making mistakes, but starting to understand where those mistakes come from. Although it's difficult to attack them, but at least I know where I am. And then hopefully you enter in phase number 5, the consistency phase. This is the phase most traders hope to reach. not perfection, but consistency. The traders who reach this stage often have something in common. They follow a structured process. They manage risk carefully. They accept losses as part of the game. And most importantly, they stay emotionally stable, even when trades don't work. From what I understand, profitability often appears as a result of consistency, and not the other way around. But getting to this stage takes time. Often much more time than people expect. Not week, not month, but most likely years. One thing I'm learning is that trading is not just a technical skill. It's a psychological journey. You are not only learning how markets move, you are learning how you react to uncertainty, pressure, and risk. And that kind of learning can't be rushed. As I was saying before, less is more in trading. So, those are the 5 phases that many traders seem to go through. Excitement, overconfidence, frustration, self-awareness, and hopefully one day consistency. Right now, I'm still somewhere in the middle of that journey. And that's exactly why I'm documenting it. So, if you are also learning trading, I'd be curious to know which phase you feel you are right in now. If you found value in this transparent look at my 2026 trading journey, hit the subscribe button and ring the bell. Thanks for being part of this journey. See you in the next video. Until then, stay disciplined. My name is Jochen, and this is my second career.